Hey everyone, this is C Crypto Daily Buzz. Today is March 29th, 2026, and we're looking at fresh moves in Bitcoin ETFs, a major legal shift in Brazil, and new regulatory pressure in Japan that all matter for investors in Southeast Asia. This channel summarizes the most important crypto news for investors in Southeast Asia, including traders and OFWs in the Philippines, Vietnam, Indonesia, and across the region. Coming up next, BTC spot ETFs see heavy outflows as fear deepens. Bitcoin spot ETFs just logged another day of sizable redemptions, with hundreds of millions of dollars in net outflows, and BlackRock's IBIT leading the withdrawals on back-to-back days. As these outflows build, the Bitcoin Fear and Greed Index has dropped into deep, extreme fear territory around the low teens, signaling that institutional sentiment has turned very cautious after the recent drawdown. For traders in Southeast Asia, this combo of ETF selling and extreme fear means price can overshoot in both directions as large players de-risk, while smaller spot buyers in the Philippines, Vietnam, and Indonesia may see both stress and opportunity. My view is that C investors and OFWs using remittance flows to stack BTC should focus less on guessing exact bottoms and more on position size, volatility tolerance, and the possibility that ETF flows can stay negative longer than expected. Next, Brazil turns seized crypto into police budget. Brazil has passed a new law that lets authorities use confiscated cryptocurrency to fund police equipment, officer training, and special operations aimed at organized crime, as long as a judge signs off. The measure also makes it easier for courts to freeze or block access to exchanges, wallets, and online platforms, and to permanently exclude convicted offenders from using regulated financial and crypto services. For Southeast Asia investors, this shows how governments are shifting from just seizing illicit crypto to actively repurposing it, which could inspire similar debates in other emerging markets that struggle with crime and limited public budgets. In my opinion, this kind of law is a reminder for legitimate users in countries like the Philippines and Indonesia to keep clean records, use compliant platforms, and understand that regulators are gaining stronger tools to track and reassign digital assets linked to investigations. Finally, Japan's FSA warns KuCoin over unregistered derivatives. Japan's financial services agency has formally warned KuCoin and several other platforms for offering over-the-counter crypto derivatives trading to Japanese residents without proper registration. The exchanges were added to the FSA's warning list for soliciting leveraged products online without a local license, underscoring Japan's tougher stance on offshore platforms operating in its market. For users in Southeast Asia, this is another signal that Asian regulators are tightening the net around high-risk, unlicensed derivatives venues, even when they are based overseas but target local customers through the internet. My advice is that traders in the Philippines, Vietnam, and Indonesia who use offshore exchanges for margin or futures should pay close attention to regulatory warnings like this, because sudden restrictions or de-risk moves can impact withdrawals, liquidity, and access. To summarize, first, Bitcoin spot ETFs see sustained outflows as the Fear and Greed Index sinks to extreme fear. Second, Brazil's new law channels seized crypto directly into police funding and tougher enforcement. And third, Japan's FSA warns KuCoin and others over unregistered derivatives, signaling stricter oversight. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.